I'm John Hanna for CityTV.net in New York, and we have Philip Jacoby, the Chief Investment Officer for Spectrum Asset Management, joining us from Stamford, Connecticut. And we also have our guest host and regular contributor, Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. How's everybody?
Good, thank you.
We're doing good. It sounds like maybe Connecticut may be in the line of the storms.
I think Sunday is going to be very eventful. More concerned about trees and water where we are, but yep, we're probably going to get the brunt of it.
Right. And we're also getting ready here in New York as well because the mayor just announced the evacuation of the low-lying areas within New York City.
Yeah, that's smart. In the
Yeah.
late 1800s, Manhattan was under 15 feet of water in a hurricane of this kind of magnitude. So it's the real deal. I'd get out.
Where my location, my home would be like at a higher elevation. So, according to the evacuation map of New York City, we need a hurricane 4 level to have some water in my neighborhood. But the thing is that it's the wind factor. So that's the thing. I'm kind of you know uh, settling in and getting ready for that thing on Sunday. So, all right. So let's talk about the Jackson, Wyoming meeting.
Okay, sure. It kind of hard to get too much information out of it, as it wasn't a speech that was broadcast, but there's been a fair amount of discussion on the news wires and so forth, and it seems that the Fed is certainly leaving QE3, as we like to refer to it, as a possibility, but at the same time, it's a program of theirs that is certainly not imminent by any means, and I think that there was a very appropriate calling for a much better framework for making fiscal decisions in Washington. So hopefully we'll see that process play through on this so-called super committee that's been employed. So I think the Fed basically had a sanguine view on the economy. It's a view that seems still quite optimistic. We opened with the hurricane discussion. That in and of itself is somewhat troubling for economic growth, given the impact that we had globally from the tsunami in Japan. So certainly these large events that can impact well-developed economies are very meaningful for growth, and the U.S. economy, of course, is just chugging along positively, but not too positively, at what some would refer to as almost stall speed, and that's been certainly one of the concerns for the broad market in equities, and credit's got its own issues, but certainly equities have been repricing due to what has been a complete change in consensus views of global growth from about 3% down to 2%, and some even less than that. So that's all very significant. 3% has been what some have referred to as being long run and sustainable, but now that we have a limited ability to bolt on added growth through fiscal spending and the miracle of the socialist type socioeconomic system in Europe, it's very very concerning over the long run that growth is going to be mitigated quite dramatically. So the Fed is prepared to use all the tools that it has to that extent, but it's not prepared to pull them out of the toolkit quite yet. It's going to wait a bit and see how things play through here.
Okay, we're gonna have to go back to that tool set because it seems to be a very limited tools. But I want to get the opinion of Greg as well. Greg, what's your thought about the meeting, Jackson Hole?
Well, it's a pretty big non-event. Markets have been talking about it for a couple of weeks and kind of led up to this. And it's kind of a big letdown, but the markets, seemed to shrug it off, and it's been in the green territory most all day, up and down here and there. And gold, which you thought if they would have announced additional, basically printing of money and everything else, that gold would have taken off, and if they wouldn't have announced it, you'd think gold would have maybe paused some more, as it has this week, a couple of days. But gold's up as we speak, $53 an ounce. So it's just these markets in the last 2 weeks has been very very volatile. It's really kind of hard to predict what's going to happen. But getting back to the Jackson Hole deal, the Fed is kind of between a rock and a hard place. I mean, you got China has basically continued to downgrade our debt. It's interesting. They've got us. China's Daegong rating agency gives its top ratings to Norway, Denmark, Luxembourg, Switzerland, and Singapore. Among the world's nations, it ranks the U.S. number 13. So I can imagine what would happen, what we could have heard out of China if we would announce more stimulus. But it's interesting to see what will happen with the elections coming up, and if this economy doesn't start to see some signs of life, something will be done. I'm sure. They may not call it QE3, but something will be done, and of course they'll be sticking to probably continue to buy treasuries as they have throughout the year.
Okay, well, that's kind of like the gloomy picture of the economy. Let's look at the positive one, which is Warren Buffett trying to support the financial community and putting in $5 billion into preferred shares of Bank of America. Philip, what are your thoughts about that?
I think it's a great deal for Mr. Buffett. He managed to time things quite well and purchase a brand franchise at a very inexpensive price. 30-35% a book. Who knows what book really is? Even if it's 70% a book, it's still a pretty good takedown on his part. But the deal itself is a great deal for Mr. Buffett, and he'll be rewarded quite well for it.
And Greg, your thoughts about the deal?
Well, I agree. It's a great deal for Warren Buffett, and it's expensive for Bank of America, but it's probably a good move.
And Greg, do you have a question for Philip?
Well, Philip, as far as one of the things that I look at is, we've got a lot of headwinds, I think, in the economy. So just trying to frame a question here to help me frame it. We got Europe. Europe's an issue. Of course, the U.S. economy's just staggering along. And then we have China question. What's really going to happen to China over the next few months? Naturally, the economy can't continue to go up just forever. What's your view on China?
Well, I think they're trying to cool things down and do so appropriately. They're running into growth issues, that is too much growth too fast. And, you don't want your economic doubling time to be 3 years. It's actually better if it's more like 23 years or even 35 years in the case of 2% annual growth. So it's appropriate for them to temper things, and I'd really welcome a stronger renminbi. And part of me feels that there's a bit of a under the radar, call it Machiavellian, whatever you want to call it, plan on the Fed's part to keep real rates negative in an effort to keep the dollar declining. To that extent, that makes dollar-cost commodities very, very expensive for a growing China, and could in and of itself be what leads them to strengthen their currency, which is long overdue. That would only help our labor sources here.
That's Philip Jacoby, Chief Investment Officer for Spectrum Asset Management, joining us from Stamford, Connecticut. And we also have Greg Womack, our guest host and regular contributor. He's the president of Womack Investment Advisors, joining us from Edmond, Oklahoma. Philip, be safe, be careful with the coming hurricane here in your city. Again, thank you for joining us, everybody.